Welcome, dear traders. You are watching a recap of the Asian session. Market tensions are mounting. Naturally, it affects stock indexes and currency pairs. Yesterday, Wall Street closed mixed, and the NASDAQ incurred the biggest losses. Asian stock markets kicked off Tuesday with a various dynamic. Japanese stock indexes hit monthly highs, despite a cautious mood ahead of changes in the Bank of Japan. Kazuo Ueda will soon take office, and investors still hope he could adjust monetary policy settings. Meanwhile, the Reserve Bank of Australia's rate decision did not surprise traders. As widely expected, the regulator raised the benchmark rate by 25 basis points. As a result, it approached the highest level since May 2012. Overall, the central bank raised the interest rate by 350 basis points, the sharpest annual tightening in almost 35 years. Australian indexes closed at a two-week high following the meeting. Stocks in New Zealand showed muted dynamic and ended the session without significant changes. And today, traders are focused on Jerome Powell's testimony. Analysts have recently revised their forecast for interest rate hikes because of strong economic reports, and now they expect the Fed to proceed with the monetary tightening. In his speech a month ago, Jerome Powell talked mainly about disinflation and refrained from hawkish comments after an upbeat labor market report. The US currency started the Asian session in the narrow corridor of 104.10 and 104.30. It's likely to consolidate there until traders receive some signals from the Powell speech. In the morning, the US dollar index was moving in the downward channel. It was trading at 104.30 versus its main rivals. After testing the intraday low of 104.20, a further decline looks likely. Besides, there are no signs of a recovery. The dollar-yen pair performed a strong pullback. On a Tuesday morning, it was trading at 135.70. The yen regained momentum amid falling US government bond yields. It also broke through a three-day resistance level of 135.90. Hence, it turned into support one. In the Asian session, the pair was moving in the range of 135.70 and 136.20. Such a sharp drop pushed the pair further away from a highs of 136.60 and 137.00 reached in late February and early March. Now the bears are in full control. However, this situation may change quickly and the opposite trend will prevail. Today and tomorrow, the trajectory of the pair will depend on the US dollar's movements and market reaction to Powell's speech as well. The AUD USD pair rolled back dramatically following the Reserve Bank of Australia's meeting. It fell to the intraday low of 0.6698 and returned to the two-month low. After that, the Aussie managed to recover to 0.6714. Although the Reserve Bank of Australia confirmed more rate hikes, its stance looks like a dovish one. Reserve Bank of Australia Governor Philip Lowe noted that inflation had perked, so it's expected to slow down in the coming months. Following such remarks, the Aussie lost ground versus the greenback almost instantly, no matter what signals the markets receive from Jerome Powell's testimony this week. And the Fed remains more hawkish than the Reserve Bank of Australia. It means that the US dollar will be stronger than commodity currencies in the long term. In the Asian session, the AUD USD pair was trading mainly in the bearish corridor of 0.6696 and 0.6749. The New Zealand dollar advanced to 0.6220. However, bulls will soon encounter a strong resistance area of 0.6270 and 0.6275. they might not be able to push the pair above this range. The technical support level of 0.6180 limits the short-term downward movement of the Kiwi against the US dollar, and today the bears have loosened their grip. The Kiwi stubbornly clings to the bullish channel of 0.6192 and 0.6223. In the agent session, the Kiwi dollar pair was trading at 0.6209. And that's all for now. Hit the subscribe button and keep close tabs on the market developments. Please leave your comment down below and see you soon.